Special thanks to Ryan with Odyssey Airways for this beautiful hangar and the King Air. Thanks to Dimmitt Automotive Group for their exotic cars. Hot Lava for their ongoing support in staging tonight's event. Icon Aircraft for their seaplane, and First Trust Portfolios for their intellectual capital and their ongoing support. I'm really excited to be here tonight because it gives me the opportunity to combine my passions. I've been flying since 1987, and I've been a wealth advisor since 1992. And tonight I have the opportunity to combine two of my favorite things to do. There's a strong correlation between aviation and wealth management. Both are a journey. Both require careful thought, planning, analysis, and making adjustments along the way. That's why our mission at Carrera Financial is to help our clients reach their financial destination safely, on time, while attempting to avoid financial turbulence. Carrera Financial is powered by LPL. LPL is the largest broker-dealer for independent financial advisors and banks and credit unions. There's two divisions, institutional services and the side for the independent financial advisor. It was incepted in 1989 by the merger of LPL, Linco, and Private Ledger. We manage over, as an institution, $750 billion in assets. Last year's revenues was $5.6 billion, and we have over 800 banks that we provide financial services for. And I say this only because of the fact that it's the largest broker-dealer, and you have the opportunity to partner with an institution with a breadth of LPL. I've worked within every channel in our industry. I worked in the wirehouse, and I worked in the inside of banks, and as an independent financial advisor, we have no limitations in our product offerings. We have the ability to virtually partner with any money manager or insurance company so that we're able to bring best of breed products to our clients, which means makes us extremely competitive, which is our value proposition. Our open architect, non-proprietary model arms us with a competitive edge against major brokers, wirehouses and brokerage firms by allowing us to provide conflict-free financial solutions. I'm fully security licensed. I'm an airline transport pilot, which is highest designation one can receive in commercial aviation. And I presently serve as a trustee for the City of Tampa's General Employee Pension Fund. I'm a mayoral appointed trustee, so I've been appointed by the last 3 mayors to help manage the pension funds for the City of Tampa, and I presently serve as chairman of the board. These are the awards that we've won throughout the years, and Carrera Financial allow us to become your financial pilot and navigate you to the destination of your financial dreams. I'd like to introduce James Molinari with First Trust, and he's going to provide us an update on the capital markets.
Thank you. Thank you. Good evening, everybody. How's everybody doing today? Great. Kind of a unique setting, I would say, huh? What a cool place. Normally doing these in the private rooms of steakhouses, but just getting a little stale at this point, so it's fantastic to see everybody in this setting. I'd like to introduce myself. I'm James Molinari. I work with a firm called First Trust Portfolios. We manage about $150 billion out of the western suburbs of Chicago. What I'm here to do today is kind of talk about some things that are going on in the market, and what are some things that have happened over the last 3 weeks or 3 months that have changed your view. All right, well, COVID's there, right? That's very present in all of our lives. There's also been an election, okay? Who wins president matters. We're gonna get into some of the data. There's gonna be absolutely no opinion on this because we realize that everybody has a different one. What I'm gonna get into today is a little bit about what's going on in COVID, what the election really means to you and your financial future, and I'm gonna leave you with an idea that some of our largest institutions and pension fund buyers have been using to navigate through turbulence in the market. Okay, so this is our COVID-19 tracker. There is no opinion on this whatsoever. This is all data. And so what we're seeing here is we're looking at your daily reported new positive cases versus daily reported deaths. Okay, 1 death is too many, but we want to look at the trends. And what you're seeing with the trends here is that daily deaths are going down. Another issue that we're seeing is kids were going back to school, right? We took them out of school in March, and then we started slowly layering them back into school in September. And if you see here a report from McKinsey, which is essentially a huge institutional bank, say disrupting in-person classes through January of 2021 could result in the loss of 61,000 to 82,000 in lifetime earnings for K through 12 students. Okay, so there's a huge contingent of people saying get them back into school. There's another contingent of people saying don't send them back. What's great is we live in a place where you can choose. Moving forward here, if you take a look at the average fatality rate, we really focus more on the deaths than the cases, right? Because the reason for that is we're seeing the average death rate go down. Back in April, we were losing about 12% of everyone who checked into the hospital with a COVID case. That's outrageous to think, right? Now we're down to less than 2%. As you can see here, this is a graph of all the different states and the percentages of their hospital beds that are occupied by COVID patients. On average, you're kind of seeing this orange color, right? That means about 5 to 10% of all the hospital beds in those states are occupied by COVID patients, right? So again, we think that these hospitals and ICUs are being overrun with COVID patients, and that's really just statistically not the case here. This is our high frequency data. If you were at our last one, our last meeting in July, what this is just a list of different statistics where they've been and where they're going. Okay, for example, I like to show box office receipts. How many of you are getting phone calls from your friends saying, hey, let's go grab dinner and go to the movies? Anyone want to sit in a movie theater with a bunch of strangers right now? For a lot of different reasons, we're just not seeing that. If you take a look here, back last year in this time period, October 9 through 15, we had $202 million spent at movie theaters, just in that 1 week alone. In this year, in 2020, about $12.5 million was spent at movie theaters, which is actually kind of impressive. If you take a look year over year, we're down 93.8%. However, week over week, we're up around 16.5%. Basically, the trend that this graph is showing you is that we're still way down from the levels we were at a year ago, but they're trending in the right direction, except for one: open table state of the restaurant industry. I don't know if any of you guys have heard, this isn't happening here in Florida, but in some of the major cities up in the Northeast and the Midwest, they're going back into lockdown. I was actually born and raised in downtown Chicago. Chicago, you currently can only eat outside. Does anyone want to eat a meal outside in Chicago in December? Probably not. For those of you who haven't been there, it's a winter hellhole, I'll tell you that much. Another one I like to look at is TSA checkpoint data. We had 860,000 people go through TSA, get on a plane last week. That's down from 2.3 million. So again, still down 64%, but month over month and week over week, we are seeing improvement. So we're slowly getting back to the levels that we were at about a year ago. But again, the COVID phenomena really has decimated our economy. Let's take a look at what some of these different states are doing in reaction to the second spike. All of our friends up north are fully preparing for another shutdown. In fact, the idea of Thanksgiving and holiday parties is terrifying a lot of local officials in these different districts. So as you can see, New York, Illinois, and California, they're going back into shutdown. Again, you're seeing this a little bit in here in Texas as well. Florida is holding steady, and I think our governor, Ron DeSantis, has made it very clear that he plans to hold it steady there without introducing another lockdown. So again, what you're seeing here is different states are managing this how they see fit. However, we are in a bit of a regime change, right? We do see Joe Biden taking over the White House, whatever your opinion on that might be. If he does actually get in there, it's very possible that we start to see some different, more strict mandates, because keep in mind, that's what he promised the people who voted for him. So that's something that he'll focus on right away. Let's take a look at some of the economic data. If you take a look at GDP, everything that we produce here within the United States, goods, products, services, everything, airplanes, we took an enormous hit back in April, May, June, July of this year. We saw GDP go down 30%. To put that in perspective, our GDP back in 2008 went down around 4.5%. And that was a massive global recession. If you take a look at the numbers here, it's fathomable. However, we bounced back pretty nicely, right? We started to add jobs, add GDP back. We saw GDP grow at around a 33% rate in the third quarter of this year. If you would have said that without COVID, no one would have believed you, right? It's absolutely ridiculous. Jobs, the most important thing that we can do is go to work and produce, right? Yeah, we saw jobs going in the right direction there. Things were great. We all know what happened. However, we've added about 10.6 million jobs back. And the unemployment rate, believe it or not, is actually under 10%, even with the massive shutdowns and the massive government-induced lockdowns that we've seen across the United States. What makes the stock market go up? When you buy stock, what makes it go up is if it earns money, right? If you take a look at our earnings in 2020, we have seen a bit of a decrease. That's mainly because of COVID. It's entirely because of COVID. Before this, we were trending in the right direction. Now, as you can see, our estimated earnings for 2021 puts us in around the $160 billion range. These are massive earning increases, even with the work from home and shutdown environment that we're currently living in. So I'm just gonna end here with a couple of statistics and then give you a unique idea that a lot of the institutions that we're working with are utilizing to navigate through these markets. Okay, so the first year of a 4-year presidential term, okay? And again, leaving all opinions aside, the first year of a presidential term, on average, a Democrat averages 19%, whereas a Republican averages 12.3%. You might think those numbers would be flipped. However, a lot of people would tell you it's because Republicans inherit a big mess, right? And again, that's all in the eye of the beholder. Let's take a look at how the S&P returns when Washington is composed a certain way. Okay, so I'll take a second on this graph. If you look on the left here, this blue box is when there's a Democratic president, and if that Democratic president has a full Democratic House and Senate, a Republican House and Senate, or split, as you can see, the number one combination is actually a Democratic president with a Republican Congress. If things are to settle the way they are right now, we would have a Democratic president and a split Congress. The S&P would average 16%. Now, let's say the Supreme Court comes down and says, hey, we don't like the way this election went. And let's say Trump comes back in. We would have a Republican president and a split Congress. The most important thing to take away from this graph is how many of you see any negative signs? How many negative numbers? I don't know, I'm in your way. Can you see any? You can't. They're not there, right? Every single one of them are positive. Regardless of the composition, the S&P 500 finds a way to grow. Okay, so these are the S&P 500 index returns in presidential election years. We're pretty much at the end of this, so it might not be as significant, but here's something to keep in mind. There's been 23 presidential elections since we founded the S&P 500. Of those 23, 19 of them have been positive. So 83% of the time, a year like this year ends positive. As you can see what's going on right now with the vaccine being introduced, with there being gridlock in Washington, and with there being a stimulus bill on the horizon, the S&P 500 will finish positive this year. When a Republican was in office and a Republican was re-elected, or followed by a Republican, the average return is 11.9. This one I feel is kind of interesting. When a Republican was in office and a Democrat was elected, the average return is minus 2.6. What does that make you think? The market doesn't like uncertainty. They don't like knowing what's going on next. The reason we've seen the markets go on a tear since Wednesday, November 4th, is because they truly believe that Republicans will hold the Senate, creating massive gridlock in Washington. Gridlock means not a whole lot of things are going to change. Last but not least, it's important to keep things in mind. And a lot of times when you're watching the market on a daily basis, you might think, okay, well, when things get really bad, we're going to sell. When they start getting better, we're going to buy back in, right? But the object is not to buy high and sell low, right? It's the exact opposite. This graph shows the history of staying the course in the S&P 500. I like to show this as an example. In 2009, our biggest intra-year peak to trough was a minus 28%. That means the market had given up 28% of your money at some point throughout that year. The market's down 28%. what do most investors say to themselves? We're out of here. It's time to get out, right? If you had done that, you would have missed a positive return of 23% in the market. How about 2020 for an example? And this isn't even updated yet. If you sold in March or April and went away because you were worried about COVID, you would miss what is now a positive 12% in the S&P 500, right? That's why working with a financial professional like Ernie is important, because he's going to make sure you keep things in perspective. It's all about perspective and navigating turbulence. The history of bull and bear markets. This shows you the percentage of time the S&P 500 is going positive versus when it finishes negative, right? The average bull market, which is when the market is up 20%, is about 9.5 years. The average bear market is about 11.3 months. Okay, it's very easy to get lost in the returns during these orange valleys and not focus on these blue peaks. However, there are certain instruments out there that can help you navigate through that. And that's what we do. What I do is I represent 13 different investment banks that manufacture products that create structure inside of a client's portfolio. They're called structured investments. I think some of you in here might own them, but let me just walk you through a very basic structured investment. Okay, this is something that Ernie has sold for quite some time. It's called a buffered note. We tie it to the S&P 500 for a 2-year hold. What's going to happen is we're going to measure the S&P after 2 years, and we're going to apply these 3 different criteria. On the downside, we give you a 10% buffer. On the upside, we give you upside leverage. Now, you might be thinking leverage, that's what got us into trouble in 2008. We don't like that word. In these products, there's only leverage on the upside. So that means when you do well, we only double you on the way up. On the down, we protect you 10%. So here's how it works. For 2 years, you're going to be invested in a product. Let's say you're down 12%. In this case, you'll be down 2. We're going to give you a minus 2% when the market's down 12. You're going to win on the downside. If you're above that buffer level, you just get all your money back. A minus 8 is a full return of principal. Now, on the upside, remember that leverage we were talking about before? You're a positive 8, we'll give you 16. We're going to double you on the upside all the way up to a 22% cap. So for example, if the market were up 24%, you would lose to the market. We would give you 22% instead of that 24. You did it with a 10% buffer, and that would be the end of the investment. So again, the big takeaways I want you guys to have here is that COVID was a terrible thing for our economy, but it's getting better. There's a stimulus coming. There's 2 major pharmaceutical companies that are manufacturing hundreds of millions of vaccines. With the stimulus down the road and gridlock in Washington, we think there's no reason to believe that the markets are going to get better. But if you're worried that they aren't, there are instruments out there that can protect you from a negative turn in the market on the downside. That's all I had for you here. I will turn it back over to Ernie. That's the end of my presentation. Thank you guys very much.
Thank you, James. I appreciate it. Products like this is what I was referring to during my presentations. These are very unique products. You really can't get these type of products at other channels in our industry, such as banks or wirehouses. They have limitations on products such as structured notes. I'd like to introduce Ryan Gugwa with Odyssey Airways, and he's going to give us an opportunity to view his aircraft and also give us a overview of his company.
Hey, how's everyone doing? All right, so my name is Ryan Gukwa, and I own and operate Odyssey Airways, and we're a private charter air operator and aircraft management company here in Tampa. I'm the president and the chief pilot. Back there is Chase Ryder. He's also one of our pilots here for Odyssey, and wandering around at one point was Mark Timmons, who's our director of maintenance. Just a little bit about how I got into aviation. Ever since I can remember, I was fortunate enough to always want to be in an airplane. My mom recently found one of these books that we made when you were in kindergarten, where you said the top 3 things you wanted to be. I've accomplished 2 of those 3 things One of them, I don't know why I was infatuated with it, but I always wanted to be a Publix bagger. And I did that in high school, and so I'm really glad to check that off my life goals list. The second one was to be a pilot, which I did do that, and I'm still doing that. And the third, I still have time in my life, I hope to accomplish this, but it was to be a garbage man. And I don't know why. Those three things, bagging groceries, watching people pick up trash, and flying airplanes, it really interests me. But fortunately, flying airplanes still does. And just being around airplanes has, it's even to this day, I'm surrounded by this all the time, and I just love seeing them. Our offices are actually right here in this hangar. And most of my experience, I went to college for aviation at Jacksonville University. Shortly after that, I actually moved down to South America in Ecuador, and I actually teach people how to fly down there, and it was an interesting experience to say the least. Fortunately for myself, I actually ran out of money and had to come back to reality and come back to the States. I applied for a data entry job, and some had to help pay my student loans, which, I don't know, those things, they do come after you to pay those back. And it is expensive to become a pilot, so I went to a data entry position just to help pay back some of those loans, and it ended up ironically morphing into a corporate pilot position. So all of my aviation experience is in corporate aviation. I chose to bypass going to the airlines for the sole reason of I wanted the variety, I wanted more social interaction with people, and I wanted to be more involved in the day-to-day operations of operating an airplane. So, especially in this post-COVID world, there's a lot of people that are starting to dip their toes in private aviation. And a lot of people don't realize all the benefits of private aviation. They think that it's just a luxury, and it can be to some, but slowly, especially in this post-COVID world, we're starting to see that it's more of a necessity. And at least that's what the behavior of people are. There's two reasons why people own an aircraft. One of them is to make their life better, and the other is to make their life more productive. Most of the time, it's a combination of both of those, because having your own aircraft allows you to be in more places in a shorter amount of time than flying the airlines. So if you're using it in a corporate environment, you're able to hit more cities and more times and places that really aren't accessible to the airlines. So other benefits to private aviation is going to be the safety. A lot of people will have this misperception that smaller aircraft are dangerous. And that can be true if you look at the wrong set of statistics. A lot of smaller aircraft are operated by recreational pilots that are not professionally trained. And there's nothing wrong with those pilots. The good pilots are safe as any others. But there are a subset of those pilots, like ourselves, that are in private aviation, that are professional pilots, professional trained, standardized in our training, and we go through recurrent training all the time that makes us much safer than your average pilot. So to break down some of the statistics, there are an average of 0.16 accidents for every 100,000 hours flown an on-demand charter, and to compare that to recreational flying, that's 6.5 times safer than your average, what you might hear on a 5 o'clock news story. Convenience, you can leave that on your schedule. You don't have to worry about what time your flight leaves. You don't have to worry about if you have a connection in Atlanta or in Houston or in Newark. You skip all that. You don't have to worry about the 2-hour security line, the potential delays due to the flight that you're on got delayed at its previous flight. So it obviously offers a lot of convenience, and that also lumps into reliability. The next thing is going to be access. There are over 25,000 airports in the United States that is accessible to a small aircraft, such as like our King Air 200 right here that we operate. And the airlines can really service only about 300 of those. So it's a fraction of the airports that are available to travel to. So that means when you're done in the airplane traveling to the city that you want to be at, you're actually closer to your ultimate destination. And finally, the value. Everyone should place a value on their time, and private aviation gives you more time than you can imagine. It's basically a time machine for you. So why do our customers choose Odyssey Airways? So the first thing is we are attentive to our customers' needs. My experience of 14 hours being in some sort of corporate aviation environment, I want to know what the customer's goal is, what their mission is. Why are they traveling to that destination? And we want to try to make that as efficient as possible. There are other charter operators that do the job of getting you from point A to point B, but they may not really put the attention of detail into why you're going there. Is there an airport closer to your ultimate destination? Is there more services available at a different airport that you may think is better? So we try to get down to more of a personalized experience, and we want to be part of your team and not just getting you from point A to point B. The next thing is the condition and age of our aircraft. If anybody's had a chance to go inside our King Air, you'll see that we try to keep this impeccably maintained. Well, we do keep it impeccably maintained, but we try to keep it pristine and clean, and that is an advantage over a lot of charter operators, because many charter operators will try to just run the airplane to make as much revenue as possible. The more you fly an airplane or drive your car, the more worn down it gets. And we try to cap that usage out to make the aircraft owner happier, but also to give the product a much better look to our customers. We also have extensive experience operating in the Caribbean, Mexico, which can be tricky. So that is where a lot of our destinations end up being out of Florida, which is very accessible in a King Air 200. For 2.5 hours, you could visit several islands in the Caribbean, and a little bit more, you could visit almost the entire Caribbean. And like I said, friendly and personalized service. We try to make traveling in our aircraft part of the travel experience and not just a means to get to your destination. So I told you that we are an air charter operator, but we're also an aircraft management company, and they go hand in hand. So a lot of people will be interested in owning an aircraft, but they may not know all that goes into the ownership of an aircraft. And that's where an aircraft management company like ourselves comes in. We will find the proper pilots for staffing. We will track all of the maintenance items, which is extremely important. This is not like a vehicle or a car where you can just pull over the side of the road if something goes wrong. You want to make sure whenever you put people in that aircraft that everything is at top-notch standard. And that's what we ensure. And there's a lot of maintenance items that we have to track, and that we want to make sure that items are replaced before they're broken. That's our biggest goal. We're not looking, it's not like we would do with our car where a check engine light comes on, and as long as it starts and stops, we'll just keep going until it finally breaks down on us. In an airplane, we don't want that to happen. We don't want the check engine light to come on. So part of that is tracking these maintenance items. And in something like that King Air, there's over 400 maintenance items in different intervals that we have to keep track of. If you're not experienced in that, you really should contract, maybe not ourselves, but any aircraft management company to make sure that the aircraft is maintained in accordance with the way the manufacturer says, so that you, your family, your friends, business colleagues, and associates are safe, and that they can trust the reliability of the aircraft. Finally, we help out with the aircraft selection and acquisition, because part of it is going to be logbook reviews. A logbook is basically the bill of health for your aircraft, and we want to make sure that before you make a big purchase like this, that we are digging through the health of the aircraft to catch any gotchas or anything that maybe it's in good condition. However, you may not realize that in 2 months down the road, you might have a very costly $500,000 repair that you're not factoring into the purchase price of that aircraft. And as part of that, we set up our maintenance tracking program at that point, and our biggest thing is to preserve the value and possibly increase the value of that aircraft by keeping pristine aircraft records, so that the next potential aircraft buyer for your aircraft is going to look at those records and see that it was maintained in accordance with the manufacturer. And that will help sell the aircraft when you want to upgrade or just to get rid of the aircraft. Variable cost savings, what we mean on this is that as we increase our fleet, our cost of fuel goes down, our cost to hangar the aircraft goes down. We basically put you into our fleet, and then everyone takes advantage of that pricing. And then finally, if you opt to put it on the charter certificate of Odyssey Airways, we're able to generate revenue when you're not using the airplane. And basically, you may be interested in purchasing an aircraft because you want that convenience and that accessibility, but you're probably only going to use it 3 or 4 times a month. You let us know, just like with our charter customers, we want to know what your mission is and what your objective is in that aircraft ownership, and we will figure out a good cap to make sure that we either use it as little or as much as you want us to use to generate revenue, which goes back to the owner. And that, in essence, will reduce your fixed cost of ownership. Our pilots are going to be safety is always our top priority. We spend a lot of time training, retraining, keeping standardization. We make sure in the hiring process that experience is necessary. And we're not just talking about experience and qualifications to operate the aircraft. We want to make sure that for our aircraft owners that the personality match and flexibility of that person's life is in unison with what your lifestyle might be. Because you may have an airplane and you may own it and you want to go somewhere, but if the pilot is not on that same wavelength and same style of what they want to do, then you may not have anybody to fly it. So we make sure that we don't run into that issue. All of our pilots are flight safety trained, which is a Berkshire Hathaway company. They have over 30 locations all over the US and actually all over the world. Some of the smaller airlines actually contract them out, and their simulator training, top-notch training. Maintenance, our director of maintenance had to step out, but he keeps track of all of the maintenance items that I talked about, the 400 so items on our aircraft, and is also able to offer a piece of actual savings on maintenance costs. He's always in the know of changing regulations, changing requirements, and we stay on top of that, which could be easily overlooked if you don't have the expertise to do such a thing. And then finally on the generating of charter revenue. So this, to keep an airplane in a hangar is a fixed monthly cost. To insure the aircraft is a fixed monthly cost. To employ the pilots is a fixed monthly cost. The charter revenue that we generate goes back to the owners to basically, our intention is to minimize that to where your fixed cost is as low as it can possibly be. And you're really only paying for the usage, which makes it a much better option if your usage is high enough on an annual basis than just going out and chartering an airplane or flying first class or whatever it may be. For everything that I talked about, if you go to our website, which is flyodyssey.com, you can see some blogs that are always up, which talks about some of the items that that I'm talking about today. Kind of keeps you in the know of what we're doing as a company, where we're traveling to, and even travel ideas that you might have for some of your future travels, especially as things start to open up around the world. And that's all I've got. Any questions, feel free to give me. And if you want to see a tour of the airplane, you're free to go inside there, but I'd be happy to go in there with you or Chase and explain what some of the buttons do. Or maybe you can explain to Chase and I what them do. So, all right. So I appreciate you guys coming out. Thanks.
Well, that's it for tonight. Thanks again for joining us, and take this opportunity to check out the toys with Dimit, also with Icon and with Odyssey. Thank you for coming, and special thanks to my beautiful girlfriend Marcy for helping out with us tonight.